Okay, welcome back. It's Thursday. Late start today, 12 past 11. You can see on the chart there. I started to mark up. We've got a little zone there. We've had another, this area up here is a new high, 5,600, unbelievable. So we've had a big spike up, pull back. So just assessing, like looking, at the moment we're in a mini downtrend, micro downtrend, and I'm really just sitting here, standing here, looking to just get the lay of the land, just get a feel for what it's doing, where it's looking for liquidity. We go back to the 5 minute for a second. You're really in a 5 minute downtrend, broken there. Based on that there, it's come down, pushed up, couldn't break through, broke that one up there, a mini, and then a solid one there. Now it's coming back up to feed into it. So again, just looking to see what it's saying to me. These are just unmarked. I haven't got anywhere to put them for the minute. So it stays above here. We're back into a mini micro long. At the moment it's struggling. I think it'll push up. These usually don't get up to there and then drop back down. I really want to trade the liquidity of it. What's the market telling me now? I think this will pop up to here. That's a 90 pip zone. Don't quite know what happened then. That on and it bounced me out. Okay, we've opened the score this morning, 30 pips. That's it there, 30 pips. Now we're waiting. It's reacted to this over here as it would be expected to do. It's disappointed in yesterday's performance in terms, not so much the result, but the performance in calling it and then just reacting against it. It just doesn't make sense to do that. So this is reaching back, and this is where it starts looking for liquidity. It's another 30 pips. And that's scalping. That's, to me, makes sense. It's up in the zone, it's pulled back, it's reaching back, it's looking to go up. Liquidity 101. This one, the first trade, I actually tried to put it on just in here because I expected it to do exactly that, and I didn't get it on quick enough for whatever reason. So we're after that coming into 11.17 at the moment. Usually 11.20 for me, from what I've ever observed, is the the reaction, that opening reaction, which is what all this is. Now it'll settle and it'll do its thing for the rest of the day. So we're just looking to see where and what it's going to do. So we've got a new candle. This is going to pop above that one. Take that. There it goes. Exactly what we're trying to do. Everybody that trades, I think they need two things. They need three things. They need two things fundamentally on the chart, what we're looking at here. They need a story. They need a logic that they're following. It might be a strategy, it might be a set of rules, somebody might have taught them, whatever it is. It's simple, it's fundamental, and it's repeatable. They tell the same story over and over and over again. And they trade what they see. They keep trading what they see, no matter what. You trade what you see. And whatever that story is, that's what you trade. And you repeat it. You just keep repeating it, whatever it is. But you've got to see it. You've got to understand it. You've got to see it. And then you've got to repeat it over and over and over again. And that's the mastery of it. Then you create a model. You create a strategy around what you see, and then you execute that. It's either a set of rules or it's a model. And a model is you're flexible. You work with it, but it's all within the context of the story, over and over and over and over again. And my story is liquidity. I believe that price is always looking for equilibrium, and equilibrium is a willing buyer and a willing seller coming together repeatedly in the same fashion. And when there's there's more deal flow that wants to buy, and this is not number of people trying to buy. This is this is actual deal flow. Then price will push up, and it will continue to push till it finds an equilibrium where the deal flow equals out. And it's always in that dance. It's in that dance over and over and over again. It'll come back, it'll look for equilibrium, it'll find liquidity, it'll find deal flow, and then it'll push off. This will pop up here, keep driving up. Or I expect it to. There it goes. It's popped over the top of that last one. We'll take that. Now the trick is, as I said yesterday, and I failed to do it particularly at the end of my session yesterday, is to get on the right side of the V. One must get on the right side of the V. The right side of the V is this section just here. And the more you repeat it, more effective you'll become as a trader. Now it makes logical sense. It's always going to, here it is, it pulled back, pushed up, pulled back, pushed up. We've got to get on into that box in there, on that side of it. My biggest fault is I go too early. Then I've got to sit through the pain. There it is there. It's that side there, up into there. It holds, breaks this in here, pushes up, pulls back, pushes up, pulls back, pushes up, pulls back. And it's going to do the same thing over and over again. So I'm waiting for this dance of liquidity. Now, when we look, where did it react? So we take our caution yellow bar and then we link it to here, and that's where it's going to start to find what is ever in this zone up in here. That's that bull candle there. It dropped, pushed back up, and then it punched down through it. This is the little pullback, pushed up, pulled back. Now it's pushing, it's attempting to push up again. Now, if I jump in here, this is a break, right? So the problem is it can get to where it does and then pull back before it goes up. That's a high risk trade. I'm increasing my risk because I'm not waiting for it to pull back. So where is it going to pull back to? It pulled back into here and then took off again, off this one to the left. Fed into it, dropped under it, pushed up to the top of it, came back to it, this here. There's where the little mini micro pocket of liquidity is. Here it is here. If I had got in up the top now, I've got to suffer the pain of a drawback. It's already come back 65, 70 pips. Like, this is madness, the volume and size of these candles on a 1 minute chart. You can see up here, 1 minute chart. So now what do? We sit and wait, and we load up when it turns again. It's in an up structure. It's got to come pretty well back to here for it to break down. Exactly what it's done again, but we remember that candle is 62 pips. We're only chasing 30. We can chase more, but at the moment that's what I've got it set to, as you can see over here. So now we just bide our time. Unless this cracks through this red down here, we've got to wait for it to reach a point of liquidity. Even that one there is just pulled back 38 pips. We do little mini markups. Brain's looking for a pattern. I have to give it I have to act in a consistent way to let my brain create brain pathways of repeated behavior. That creates muscle. And not from a scientific point of view, this is just the general idea of building brain patterns. Another one. See, it just popped up above it, jumped in. Broke that. And that's the interesting thing. The picture that you see on the screen will never truly, when you act on that, you've got, I don't know how many nanoseconds between when you hit the button and when the trade occurs. You know, we're not high frequency traders. And when that jumped, I hit bang, and by the time it got on, it's jumped 30 pips, and I've then got 30 pips out of it. It's like, wow, you got to be quick. Again, we just bide our time and wait. It's feeding into this zone here on the left at the top. So it's going to try and break through that. We don't want to get in its road. And if anything, bring that box to there, bring it down to there, and then make it yellow because it's a caution box. And what I mean by a caution box, it's got to break that to go long. So we could bring this green one down, and then it's off to the races up in here. Will it do that? I don't know. But at the moment, what I'm trying to do is be cautious. I don't want to set a trade up and then try and trade through that space. And then I don't want to go short here because it could just as easily, it's too strong. It's just pushed up from the bottom to the top there, 699 pips. If we look at, and this is all about keeping the micro perspective. We're trading a 1 minute gold chart. That morning session has gone up 2,200 pips. Now, since London opened, which is roughly there, it went 730 pips down, and now it's trundled 725 pips up. So, this is the wild and woolly West trading this and scalping it. That's why I'm trying to tell the same story. Seek liquidity. Wait till it pulls back. Get in. Trade in the direction of structure. Structure is long. If I go long here, it's too early. I think we're going to see a little wiggle down and then a push up. It's just eating into that block of liquidity. There it is, a jump up. It'll come down. And possibly a little too early, but it's really struggling to stay down and it's trying to push up. It's strong, so we'll take a chance here because all the signals are telling us that it's going to push itself up. There we go. Tried. We'll take it off there. I'll just do my little spreadsheet, as you know I do. pops, it's going to go straight into that void above. And that we can do now is take that from about there, and we're going to find that there's, in my opinion, a liquidity void there. What does that mean? Well, we put the green back down here, we get rid of this box. There was buy liquidity, there was deal flow in, and then it got to a certain point, those orders were filled, and then it dropped back down. So in here, there's not going to be a lot there. So if it pushes up with any momentum, it's going to be hungry to chew through that. Got the feeling that it's going to push back a little bit here to get a bit more liquidity momentum. So we want to be a little bit wise here. I know that's a bit rich coming from me, but hey, one can try. This is starting to shape up now to have a bit of a negative feel. When I say negative, a short feel to it, because it's broken these two in here. Now it's pushing back up. That bear really hard sometimes to get the scale on the chart because it's moved so much. Now it's put itself back in positive again there. That will move, that white candle, 61 pips. And right, it's gone above the green. I think we need to do a little channel check the scoreboard here. Let me just adjust the scoreboard. Boom, boom. Okay, we haven't had any losses today, which is pretty special. Done 13 trades. As you can see here, there's 13 trades, all winners. I've made 440 pips, which is a 29%, 29R. $201.87 at the moment. That's a 38.98% return on bank. So we started with 517. We've now got $719. Pretty special. It's doable. One just needs to take one's time and trade one's story. Trade your story. And this is again, you can see here it pushing up into that yellow zone. There's a liquidity void there. And that's what it's doing. And it's going to do that over and over and over again. And it adds up so quick. Little chunks, just little bites of the cherry. Very sweet, sweet meat. So we want to have a look at our official scoreboard. I'll just set it up here. You can see there, we've got $202, 13 trades, 440 pips, which is then the equivalent of 29R. So that's a good result. We see it pulling back here. Okay, I'm getting wiser, I haven't jumped in. We can take a trade short, but we're really about the high expectancy trade. Where is the positive expectancy trade? So we're trading structure. There's a question in there whether it broke structure, sure, but it really breaks when it hits this down here, the line in there, and it's just fed straight back into liquidity. So we play it safe, give ourselves the best chance. $30 pips, straight out of the liquidity block, so to speak. That's your highest expectancy trade, right there. Anyway, it's going to be a short one today. We're going to finish on that note. Don't have to trade for long, just trade it well, trade it patiently and correctly. And you know, we've put $220 in the bank, so really happy with that, and I'm much happier with the performance. That's a solid performance this morning, trading really good example of liquidity. And the only question mark was these three in here. The bottom one was fine, these two top ones were too early. The rest of it just stayed with it, followed it, waited to pull back, jumped, pull back to, and you can see how far it's moving. They're 30 pip trades. So do it again in there. It'll it'll need a little bit of a liquidity jump in there. It'll pull back a bit. Little trade in there. 232, 750. Wow. That's 9 days straight winning, starting with $88 in the account. This has run up to $750 now, and we're climbing. Thanks, people. Hope you got something out of it. Just to hope you got something out of it. Talk soon. Thank you. So I'll just round that off. 16 trades, won every one of them. My average pips were 30 pips a trade, which is 2R, $14. I've made $232 profit. That's 32.92R. It started with 517, finishing with 750, which is a 44% return on bank. So really happy with that result today, and really hope everybody got something out of it. I think I executed beautifully. What a champion. We can't do Zilla for a bit because it's dragging the chain. Anyway, all the best. Thank you.